The euro retreated mildly as the week starts but stays firm, even though there was news that Troika has rejected €2 billion of the €12 billion austerity package of Greece. Greek socialist leader Venizelos noted that Troika has not accepted all the measures, but he assured that Greece has alternative proposals. Meanwhile, Finance Minister Stournaras played down the news and said only a few measures were rejected. Troika went back to Greece last week for the review and is expected to stay for a while. Prime Minister Samaras is expected to meet with Troika today to continue the discussion. Troika is also expected to finish the final report for the EU before the ECOFIN meeting in early October, for approving Greece's request for a 2-year extension to its fiscal adjustment programme. The European Monetary Affairs Commissioner Olli Rehn said over the weekend that the ECB's outright monetary transactions is a very clear framework, and there has to be a request by a member state first, before the EU, ECB and possibly the IMF too, will define specific conditionality. Regarding Spain, Rehn noted that there is a clear path of fiscal adjustment and policy agenda for structural reform already. Rehn also noted that Spain should have done enough to comply with the OMT's conditions should they seek help. IMF Chief Lagarde hailed the ECB for giving a clear indication of the framework in which it will be an active player in restoring the situation in the Eurozone. She pledged that the IMF is ready to help and to assist in the design and monitoring of eventual programs. She also hailed that Spain and Italy had taken strong measures that were adequate in themselves, and saying it's up to the individual country to seek help or not. Elsewhere, the dollar remains generally soft despite mild recovery. The weaker-than-expected non-farm payroll made this week's Federal Open Market Committee meeting relatively more important, even though no drastic changes are expected so far. The Fed will release new economic projections and might push the low-rate pledge into 2015. But there is just a very slim chance that the Fed will announce new stimulus, in particular considering the ECB's OMT announcement has already given financial markets a very strong boost. The latest Commodity Futures Trading Commission report showed that on September the 4th, net euro shorts were basically unchanged, compared to a week ago at 102,300 contracts. Net Japanese yen longs rose slightly from 21,500 to 24,000 contracts. Sterling positions remained relatively neutral, changing from 2,000 net longs to 6,900 net shorts. Australian dollar net longs dropped sharply from 78,000 to 62,400. Meanwhile, Canadian dollar net longs rose for another week from 60,900 to 66,500. On the data front, Japan GDP was revised down to 0.2% quarter-on-quarter in Q2, while GDP deflator was revised higher to -0.9% year-on-year. Current account surplus narrowed to 0.34 trillion yen. Australian home loans dropped 1% in July. Japan household confidence improved slightly to 40.5 in August. Eurozone Sensex investor confidence will be released whilst the US economic calendar is empty. Euro, Japanese yen daily outlook intraday bias remains on the upside and current rebound from 94.11 should first extend to a 38.2% retracement of 111.43 to 94.11 at 110.72. A break will target the 101.62 key resistance next. On the downside, below a 99.59 minor support will turn bias neutral and bring consolidations. But retreat should be contained above 97.98 support and bring another rally. In the bigger picture, a fall from 139.21 is viewed as part of the downtrend from a 2008 high of 169.96. Such a pattern is seen as a falling wedge with a bullish convergence condition in weekly moving average convergence divergence. Current developments are raising the odds that such a downtrend is finished at 94.11. A break of 101.62 will be another sign to affirm this bullish view and will turn focus back to the 111.43 key resistance for confirmation. Before that another decline could be seen, but even in that case, we'll expect strong support above 88.96 to contain a downside, and to form a major bottom to bring a reversal.